Hey folks, so this is going to be a quick video on who I recommend for active management. If you're going to hire somebody or a firm to actively manage your funds, I'm going to share with you a little bit who I think you might want to look at for sure. Because I'm not against active management. I'm just against paying high fees for not anything that's being happening for you for sure. I think at the end of the day, in my tutorials on various mutual funds and whatnot, the facts are some active managers have outperformed indexes. Just look at Vanguard Wellington. You just simply cannot argue that. Wellington smoked the total stock index and it smoked it with a whole lot less volatility. Now that might be luck, I don't know, but it's still, the facts are Vanguard Wellington fund, which is actively managed, smoked that of the total stock index with less volatility over the last 20 years. So I'm not against hiring somebody to run your money for you. I'm just not. I am against hiring somebody to run your money for you who's not doing anything for you, is not educating you, who's just what's called reverse churning, where they're taking your money and they're just putting in some push button investment warfare and charging you 1% fee. I don't like that at all. In fact, I think anyone who's charging you over 1%, I wouldn't do it. Situations will dictate though, and one guy in particular I do like is my man Dustin Tibbetts over at Jazz Wealth. And the reason I like Dustin is because he'll take on anybody, and that doesn't mean that he doesn't care, but he says he's there to serve people who aren't being served by the general invested population on the whole, and that's people who don't have a lot of money, and I like that. So if you got $50,000 or $25,000 paying 1%, or I don't even know what he charges, I actually think that's absolutely appropriate, because no one else, I hate to say it, but no one else is going to take you on, because the investment management industry is only geared towards making the investment managers rich. And that's all there is to it. That's why they're all going after the people who got $1 million, because they say if I can charge a millionaire 1% and I'm going to make $10,000 a year off that guy, without even doing anything. And so that's why the guys with $25,000 or $50,000 on the spectrum, no one cares about you. I'm sorry, they don't. They're going to put you in a call center, and you're not going to get any individual advice, and you just as bad. And you're probably talking to a new guy every single time you call in. And I like Dustin because he does a lot of great educational videos. Once you break $250,000, his portfolio fees are incredibly cheap. I think like 49 basis points. Don't quote me on that, but it's absolutely without question a good deal for the level of service you're going to get. Now, I have no idea I have no idea how he's going to perform. But what I like also about Dustin, he puts it out there so you can see it. He doesn't hide it. He shows you the fees. He shows you the investments he's choosing. He shows you the performance. And I'm talking to 8,000 different people. They can't figure out their fees to save their life from other firms. Like, Josh, how do I figure out my fees? I'm like, I don't blame the client. I blame the freaking industry that we're able to hide the fees so easily that everyone's paying. It's nuts. It drives me insane. And Dustin's not like that. Dustin says, here's my fees, here's my portfolio, here's my performance. Done, done, done. Tons of educational videos, tons of ways you can meet with Dustin and his team down there at Jazz Wealth in was it Seminole, Florida, I think? Someplace in Florida. I just think he's doing great. He's a guy that's breaking the industry, and I love it for the betterment of the average client. And I'm a huge fan of Dustin. So if you're looking for someone to run your money because you just don't want to do it, I don't care why you don't want to do it. There's every reason under the sun is legitimate. It could be you just don't have the time, you don't have the knowledge. It could be you just don't have the patience. You just don't trust yourself. All these things are legitimate. I'm fine with all of them. I got no problem with it. And it could be that you think an active manager who's actively balancing your portfolio and doing it could outperform. And the facts are he could. I don't know. Dustin will never sit there and say he's going to. That'd be silly. But he could. He might not. He could. At the end of the day, though, for a fact someone's watching your money, is diversifying it and rebalancing it for sure. And I think there's a value add to there as well. And the fact that once you break 250 or something like that for Dustin, his fees are incredibly cheap. I'm a big fan of Dustin. I still like Vanguard. The Vanguard advisory service. I'm sitting at a stoplight. If you're wondering why I'm not looking at you, because I'm waiting for the light to change. I think the Vanguard advisory service for investment management is wonderful. Now, that's not financial planning. I cannot stress this enough. If you're looking at financial planning, Vanguard is not doing it. They are doing investment management. But for 35 basis points, you get a bunch of Vanguard index funds actively managed. And when I say actively managed, it just means it's rebalanced and diversified and kept that way. I don't think you can go wrong with that. I'm a huge fan of that as well. In fact, when I retire, I'll probably turn over to Vanguard and let that do it for me too, if I don't just buy Wellington Fund or some other actively managed mutual funds through Vanguard, Prime Cap or something like that. I'm a fan of that too. Schwab, again, their Robo advisor is wonderful. People say, oh, but they keep too much in cash. Hey, they're literally not charging you anything. They're not charging you anything because they have the cash. I mean, the cash isn't theoretically making any money for you. I actually take huge issue with that. Cash is an asset class, my friends. Cash is king when the markets go down. No one ever sits there and says cash is bad when the markets go down. So if the cash is good at some point, that means it can be considered an asset class. And so I'm a big fan of keeping cash as an asset class, even if you're not making any money on the upside, or even over the long run, you're not making much money. It serves a purpose, which is diversification and eliminating your volatility to some degree, not a significant amount, but some degree. So Schwab does keep 7% of your portfolio in cash. They don't charge you anything for their Robo advisor. Huge fan of that. Huge fan. That's a Schwab. I think it's a Schwab Intelligent Portfolio. No idea if it'll actively outperform. I just don't know. No idea whatsoever. But I'm a big fan of Schwab's Robo-Advisor Intelligent Portfolios for sure. Some guy on YouTube, and I like this, I forgot who he was, he commented, but he wasn't a big fan of it. I forgot why he said he wasn't, but I like that guy. I'm familiar with him, and he's a good guy. And so I took, I thought it was a legit complaint. Just a comment. He said that he wasn't a fan of the Schwab Intelligent Portfolios, but I can't remember why he said that, Frank. It might be because they keep too much cash. I just don't know. But I like the Schwab Intelligent Portfolios. I like the Vanguard advisory service. I think it's called the Vanguard Portfolio Advisory Service. And then for a smaller firm, Jazz Wealth Management with Dustin Tibbetts. I'm not sure how sizable Jazz's firm is. I don't think it's just him. I think he's got some other financial advisors there. I don't know. Oh man, looks like we got a yikes. Looks like up here we got an accident. That's not good. Oh, okay. I'm not sure what's going on, but I'm a fan of all those three. So if you USAA's Robo advisor is pretty good too, by the way. I'm not sure how much they charge. 35 basis points, something like that. I don't know. But USAA's Robo advisor, I'm a fan of that as well. So the ideal situation for a client and for financial planning industry that I'm hoping happens, I'm hoping is that you find people to manage your money, either yourself or you find a firm like Jazz with Dustin Tibbetts who can do the investment management for you for moderate to low fee. And then you do financial planning with a real life financial planner that you pay a financial planning fee for. That's the way the industry should go, and that's why I hope it does go. And it's going to go that way because everyone knows there's no value added in investment management other than diversifying and rebalancing, which does have value. But everyone knows that you can't make a living saying you're going to beat the markets and do outperformance because no one can do that. And if you're doing that, you're lying. And everybody knows that now. So I'm hoping that at the end of the day, we start saying we're going to hire investment managers to basically rebalance our portfolio, diversify, keep it that way. Maybe take a couple gambits on various aspects of overweighting, international, whatever it would be, whatever they think their process would be. And then, but they're not saying they're going to beat the market. They're not saying they're going to market time extensively. They're just saying that they're going to keep you diversified, rebalanced, and maybe they can outperform, like we see with some actively managed mutual funds. I'm okay with that, but the fee's got to be low. It's got to be, again, 50 basis points or lower, unless your portfolio size is small. I mean, I hate to say it, but the reason why no one wants your money is because if you have a portfolio of less than $50,000, you are a liability to the investment firm. So there's just no other way around that. It could be from anything from a lawsuit, just a paperwork, just a compliance stuff. And so that's why they have to charge you more for a lower balance, because they are taking a significant amount of liability. because a guy with $50,000 can sue the same way as a guy with $500,000, or file a complaint with the SEC or the FINRA. And that's the problem with the smaller accounts, is that smaller accounts have the same liability as the larger account without the revenue, and that's why they don't take it. That's all there is to it. So that's why if you have a portfolio of 250,000 or above, and you can get a guy like Dustin at 49 basis points or whatever he charges, I think that's actually stellar. If you have a portfolio of 50,000 or below, and you get an individual guy like Dustin at 100 basis points, there's 1% or whatever he charges, I think that's absolutely okay. But I would not go to, if I had a portfolio of 250,000 or more, to a guy that's charging 150 basis points. No way. That's 1.5%. That's a net loss to you for sure. So I'm not against active management. I am against when people start saying we can do things they can't do, which is, again, beat the market, keep you from down risk and all that. That's not true. So anyway, I hope this helps. So Vanguard, their portfolio advisory service, I'm a fan of. The Charles Schwab Intelligent Portfolio, I'm a fan of. The Dustin Tibbetts over at Jazz Wealth, I'm a fan of. And then the USAA Robo Advisor, I'm a fan of. None of these four firms are doing financial planning. Be advised, they're not. They simply are not doing financial planning, even though they might say it like Vanguard does, that they do comprehensive financial planning. Absolutely is not correct. So on top of that, you want to go to someone like me, someone who charges by the hour or by the financial plan, that's not selling you products. You want to go to somebody on top of the investment management to make sure your financial planning is being done appropriately. Garrett Financial Network is a good one. They charge by the hour. I'm a fan of that. What else? The independent financial advisors like me are out there. They're not that many. They're few and far between. But you can call somebody and you say, "Hey, I see you're a part of NAPFA." That's what I was going to say. NAPFA, NAPFA, North American Personal Financial Advisors. I'm not sure what that's called, which I'm a member. If you call them up and say, "Hey, I need to get a financial plan. How much would you charge for a financial plan? I do not want investment management services. I already have that taken care of, but I do want financial planning. How much do you charge for that?" And if they say, "I charge you nothing," run for the hills, because that's something. I mean, they're not charging you nothing for financial planning. They're going to charge you nothing in order to get to sell something to you. So if they're not charging financial planning fees, they're not doing financial planning. They're doing it with the purpose of trying to sell something to you. So I charge $950 just as an FYI. That would give you a place to lay your benchmark down, your marker of what a financial planning fee could be. Now, this is 2019, January. I have the reserve the right to change that price at any time I want. But as we sit here today, that's my charge for financial planning. So if that's what you're looking for, and you're looking for some guy in Lexington, Kentucky, and you're calling him up and he's through NAPFA or she, and you say, "Hey, I don't want active management fees. I don't want investment services. I just want financial planning fees. How much do you charge?" And if they say $5,000, well, you might want to revisit that, simply because, again, I'm laying my fee down at $950. I'm probably a little bit on the low end, frankly, but $5,000 is too much. I don't care what anybody says. $5,000 is too much. But let's say they charge $1,500. There's nothing wrong with that. I'd do that, once or twice. Maybe once every 5 years. I think that's money well spent for sure. Of course, that's biased because I'm in the industry. But if I'm so in that case, I'm hiring Vanguard at 35 basis points to run my money, keep me diversified, keep me rebalanced. I'm hiring a financial planner at $1,500 a year, $1,500 a pop every couple of years to do financial planning. You're gonna be in a pretty good place there for sure. All right, hey, I hope this helps. As always, anything you see here, don't forget, if you like it, comment, thumbs up. Listen, I can say subscribe, man. I almost forgot to say subscribe, so subscribe down below. And love to hear your thoughts on active management, hiring people to run your money, hiring financial planners. Do you have any experience of hiring a financial planner? Some of the comments I've had here just break my heart of the financial planners they've hired. Just bad. But if you have experience, good, bad, or ugly, send them, share it with us. The audience here at the Heritage Wealth Planning YouTube would appreciate it, as would I. All right, thanks, guys. We'll see you. Bye-bye.